Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, we have a huge show on tap today. Markets are moving this morning, and amid the latest action, I sat down with social investing platform eToro exclusively to talk about its launch today in New York, and we will have more on that in just a moment. Well, traders are witnessing some chop this morning as geopolitical tensions come into focus. President Joe Biden recently allowed Ukraine to use U.S. weapons to strike inside Russia. And according to a report, Ukraine did hit Russia with U.S.-made missiles for the first time. Now, in the wake of that, volatility picking up this morning after Russia's President Vladimir Putin said that the threshold for using nuclear weapons has lowered. The major indexes are setting up to move fractionally lower at the open. We're just about 30 minutes away. And so let's take a look at what is in store in today's show. Well, retail earnings are ramping up, and we have heard from NYSE-listed companies Walmart and Lowe's earlier this morning. We'll dive deeper into those results in just a moment. Plus, with eToro now live in New York, its CEO gave me his outlook as the investing platform has seen an uptick in trading activity. And investment company GMO is set to ring the opening bell. Its CEO is going to join me on the trading floor after the market opens. Let's dive into those retail results here that I mentioned earlier before we get to my markets guest. Walmart knocking it out of the park, beating on the top and the bottom lines, and actually upping its guidance again, showing that shoppers did have a willingness to spend just outside of the grocery aisles, which had been a big boom for Walmart, of course, recently. Lowe's also reporting it did exceed expectations, raised its outlook, but does see sales declining ahead, and that stock underperforming a bit in the pre-market. All right, well, as we get ready for that market open at 9:30 a.m. Eastern, I do want to bring in my markets guest, Kevin Mon, Chief Investment Officer and President at Hennian & Walsh. Kevin, it's great to see you in studio.
It's great to be here, Kristen.
Thank you so much for joining.
My pleasure.
And I think many of our investors and viewers eager to hear from you in terms of your take on the market. What is it?
Yeah, I'd start by saying the Trump bump could only last for so long, and these types of short-term bouts of volatility, I would anticipate at least for the next few weeks. Not only because of those rising geopolitical tensions between Russia and Ukraine, but we also have NVIDIA earnings later this week. We don't know what those earnings are necessarily going to tell us about the current state of the AI revolution. And then we hear from the Fed next month. Do they cut interest rate again? Do they pause? And what's their outlook going forward? That's a lot of uncertainty. But if I think out a little bit longer, Kristen, over the next 2 years, I'm optimistic that this bull market can run further.
Okay, and let's talk about that. The bull market turning 2 years old in October, just last month. You think we've got at least another 2 years in it. What is driving that thesis?
So we did the research back at Smart Trust, and what we found was that since 1946, that's a long time ago, there have been 12 bull markets. And the average length of those bull markets have been 5.3 years, with an average cumulative return of just under 178%. So this time could certainly be different. Past performance isn't indicative of future results, right? But if this holds true to those historical average, we might have at least another 2 years to run and perhaps another 100% in upside potential. What's going to help that? Those interest rate cuts that the Federal Reserve is forecasting, continued moderating levels of inflation, and perhaps some new policies that could encourage more economic growth coming from the new administration as well.
Amid the changes that we've seen in Washington, as you referenced, a red sweep, and of course what we see unfolding this morning on the geopolitical front. What does this mean for the aerospace and defense sector? I know a sector that you follow.
Yes, it's a great question and a great segue because I'm very optimistic about the outlook for aerospace and defense. It's certainly been on a tear this year as the Biden administration committed additional levels of funding towards the defense sector. I think that only accelerates during the Trump administration, Kristen, as our country needs to replenish, upgrade, and modernize our military warfare capabilities. What does that involve? Well, it may involve additional spending for the big defense contractors like Lockheed Martin and the F-35 fighter jet. But how about some of the ancillary benefactors of all that defense spending? A company like Howmet Aerospace, which actually makes the parts that helps the F-35 store. And then I think about modernizing, drone technologies, satellite system from companies like Kratos Security. So the opportunities are out there, and it's worthy of investors' consideration.
I do want to ask you how you, as an investment professional, are looking at some of the campaign promises from incoming President Donald Trump and what that might mean for the landscape.
Sure. I think the number one concern for most investors, even the Federal Reserve, is the imposition of tariffs. From my perspective, I think in a lot of cases, Trump's bark may be worse than his bite as it relates to tariffs. There might be more of a negotiating ploy. But if in fact he does impose tariffs, I'm not sure how inflationary said tariffs would be. We have to look at what countries, what products, what services. And tariffs today would be very different than tariffs 1, 2, 3 decades ago, as the American consumer now has more choices to turn to not have to pay those higher prices. So I'm not sure how inflationary those tariffs would be or how significant those tariffs would be imposed. So we'll have to wait and see on that front.
We have seen inflation, at least in the latest read last week on consumer prices, be a little bit sticky, and retail sales came in better than expected as well. Heading into this holiday season and amid the retail reports that we have gotten and will be getting this week, what do you see as the state of the consumer?
I'm concerned about the state of the consumer. What do we have? Nearly $1.2 trillion now in outstanding credit card debt. If in fact the consumer, which accounts for 70% of our economy, turns from paying and spending to servicing all that outstanding debt, the economy can and will only slow further. And I think that's what the Federal Reserve is concerned about as well. As in September, they update their forecast for real GDP to just 2% for this year, and then staying at 2% all the way through the end of 2026. So the economy isn't necessarily receding or going into a recessionary environment, but it's also not growing. And that's why I think the path forward for lowest interest rates will hold, but perhaps be much slower and more gradual than some earlier anticipated.
The cold weather is finally starting to make its way, at least to the Northeast, Kevin. We
might get some snow later this week.
Exactly, and felt it on the commute this morning as well. Heading into these winter months, what do you make of the energy sector in terms of how this could fare, even beyond that big picture too?
Yes, a lot of people thought with the incoming Trump administration, drill baby drill, it would be positive for oil and gasoline. I see energy through a whole different lens. I see it associated with the AI revolution, right? We know that these data centers require tremendous amounts of energy to run these massive AI algorithms. And our country has an antiquated electricity grid. So where are they going to turn? It's going to need to be a combination of multiple energy sources, whether it's electricity, natural gas, or now, as we're finding out, nuclear power. So look for those multi-utilities to provide the energy that these data centers need, and also for investment opportunities.
We are awaiting some boardroom remarks, Kevin, and we'll take our viewers there, of course, as GMO is set to ring the opening bell and talk about some of its ETFs here that trade at the stock exchange. But before we get to that, I also want to talk about healthcare, because this has been so in focus of late, of course, with the rise of GLP-1s, but also in the wake of a new administration coming in January that's made its own healthcare promises. What's on your radar in the healthcare space?
Yeah, I'm optimistic about the outlook for healthcare stocks. But when I say that, I don't necessarily mean large cap pharmaceutical stocks. In fact, I think they're going to have some headwinds that they're going to face, because if there's one thing that Republicans and Democrats agree upon, it's the need to lower drug prices, certain drug prices, and that's going to compress the profit margins of these large cap pharmaceutical companies. The same companies that have large revenue producing drugs coming off a patent and now being subject to generic pricing. So where are they going to turn to replace all that lost revenue potential? Well, I believe they're going to be acquisitive, and they're going to look to acquire the innovative healthcare solutions coming from small cap biotech companies, such as the GLP-1s for weight loss. But how about CRISPR? How about CAR-T? How about antibody treatments, gene editing, gene splicing? There's tremendous things happening in our country with respect to healthcare innovations. Teaching the body how to fight off disease as opposed to injecting it with chemicals and toxins. So look for more M&A activity with small cap biotechs. That's where the puck is going. That's where the investment opportunities are.
How does the expectation of less regulation in Washington also change the deal landscape in terms of acquisitions that we might see over the course of the next few years that perhaps hadn't been happening?
Sure, I think it's going to be a pickup in the M&A landscape, not just for small cap biotech, but also look at financials. Some of those regional, smaller cap regional banks that have been struggling. Look for more banking M&A activity, look for more M&A activity in the biotech space, and look across the corporate landscape. With less regulations, quicker approvals, you could see much more deal activity in the next 2 years at least.
So I want to drill in on the Fed a little bit.
Yes.
You and I know well, right, that what the Fed does obviously moves markets on a daily basis in real time, but also can set the tone for what is ahead as it meets every 6 weeks or so.
Sure.
Last I checked yesterday, in fact, investors or traders were actually pricing in about a 60% chance of another rate cut in December.
Yes.
I want to hear what you think is the right course for the Fed going forward, knowing that some of the data points have changed.
Sure. And unfortunately, I don't have a vote on the FOMC, so they don't really care about my opinion, but I'll share it with you anyway. So as it stands right now, as you correctly point out, Kristen, the market is expecting another 25 basis point cut next month. The Fed is also guiding us towards one more 25 basis point cut.
Kevin, hold that for just a moment. We are going to go into the boardroom as those remarks are underway. Kevin's going to rejoin me momentarily. Let's take a listen.
We measure success of a new ETF after 1 year if it has about 100 million AUM. QLTY has about $1.3 billion in 1 year. That is extraordinary. And you should be proud of yourselves. You should. I know you're the kind of culture and organization that expects success, and you're delivering success. And I am optimistic and believe that'll happen again. So in any case, I want to again welcome you to the New York Stock Exchange and convey our respect for you, Jeremy, and your organization and what you've started and continue to lead. It is an interesting time in global capital markets, and those that innovate, those that lead, those that are disciplined, we expect will continue to have success. We're committed to those values, and so is GMO. And in that spirit, I'd love to introduce Scott Hayward, CEO of Grantham Mayo.
Well, with a welcome like that, I don't know, I'm not sure we can top that today, but ring the bell. Good morning, everyone, and welcome. Thank you very much for joining us this morning. It's an auspicious occasion that we're thrilled to be here at the NYSE, and an exciting day for GMO for the reasons mentioned, both about the launch of QLTY, which we've been very pleased with just over a year ago launching it, and the results as you stated, and the second is the launch of our additional suite of ETFs, which we certainly are thrilled to make available to our clients so that they can access a variety of the sometimes non-consensus investment views that we have and get them into the portfolio to produce those stellar returns. As we welcome you, our clients, this morning, you're the reason that we're here. You challenge us with your questions, with your investment problems that you're looking to solve, and with each day striving to serve you better. And the launch of these ETFs was particularly designed to be able to do that, to provide access to some of the most compelling ideas that we see, and you're going to hear more about those this morning from Tom Hancock on the quality side of things, both in the U.S. and abroad, as well as Ben Inker on the deep value side of things in the U.S. and abroad. So we hope that you take advantage of this once-in-a-lifetime opportunity to join us for the bell ringing this morning. We're pleased that you're here. We're thankful for the trust and confidence that you put in us at GMO, and we will now take the opportunity to get ready to head up and ring the bell. So thank you again, and pleased to have you with us.
So every bell ringer.
We will be covering that bell ringing ceremony here, as we always do, on NYSE TV Live. That was GMO's chief executive, and he'll join me on the trading floor after the opening bell. We're going to take a quick break, and we'll see you on the other side.
So John, tell us a bit about the partnership you have with Santander and Openbank.
It's a Spanish man and it's a Spanish company. This is my only Spanish partnership. Santander has a long history with the game of golf and being a professional golfer. It's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S. being Openbank.
Now, John, when deciding which brands you partner with, what factors do you consider?
I try to get brands that represent me in some kind of way, right? And trying to at least having the opportunity to partner with somebody from Spain, a family that grew up in northern Spain like myself, not the same city, but close enough, that has a close history with the game of golf. I thought it was a no-brainer, right? They've also been involved in other sports like Formula One and many others. I think that was an easy choice, right? But I think every brand I've had, I try to see what their expertise is, what their motto is, and what they portray to the world, right? And that's what I try to link myself with. So my image in itself, or what is the name John, is either uplifted by those brands or related to those brands, right? And I try to be picky. Luckily, I've been able to have some great partners to join with and keep on going on those ventures.
Now, Santander is growing in the U.S. market, which is a journey you yourself are familiar with. Do you see any parallels between your own experience in the U.S. and what Santander is doing today?
There is a difference when you're playing in different parts of the world. The golf courses are different, the setting is different, right? So to be as complete a player as you can be, you have to play in all different environments. And coming to the U.S. is a massive one, right? 3 of the 4 big majors are played in the U.S. All the big events are played in the U.S. So being able to come here.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Social investing site eToro launched in New York moments ago. It boasts more than 35 million users and lets its community see how others are trading. That's the social aspect of it. Well, I sat down with eToro's CEO exclusively, and he told me that he is bullish on 2025. Take a listen.
eToro today is the world's largest social investment network. We have 37 million registered users in 75 different countries, and we're very excited to actually launch today eToro in New York, where our customers will be able to trade stocks and options on our app. Our global customers can trade crypto assets alongside commodities and indices as well, and we're excited to have this milestone of enabling eToro to our New York customers.
Congratulations.
Thank you.
Last I saw, eToro boasted 35 million users. How can this license expand activity on your platform?
Well, we've always wanted to have New York and New Yorkers on the platform as well. Obviously, there's a wealth of knowledge and information in New Yorkers trading the market, so we're very excited to add them to the platform and continue to see growth in all of the countries and all of the states here in the US.
What differentiates your platform from others?
Well, we enable our customers to actually see other people's trading activity, their track records on eToro, and we were the first company to launch the concept of social trading and copy trading. So our customers worldwide can actually see our top performing investors and automatically copy them, basically copying their entire trading activity into their own account.
What should our viewers know about investing responsibly on your platform?
Well, we've always had in mind to show people their stats, to show people their performance in eToro alongside their risk. So every customer in eToro, you can actually see their track record, their gains, but also their risk score. And I think it's super important for people to learn how to invest and learn that investing is a form of risk management and learn the risks of what they're trading and investing in.
What else is next for eToro?
We're super excited about the developments in AI and have launched multiple products this year that incorporate LLMs into the ability of our users to research and analyze what's happening in the stock markets, analyze financial reports, learn from other users, see how other users are basically trading on the platform. So as we were very early on into crypto back in 2011 and we're the first to launch it in Europe in 2013, I'm super excited embedding now AI into the platform to help our customers become more successful investors.
How does it help your customers and their performance, AI?
So specifically, I think what traditionally has been the role of a lot of analysis, right? So every time you trade, every time you invest, you need to really learn about the company you're investing in. I think your ability today to use tools to analyze companies' financials, to actually summarize what everybody on eToro are talking about right now, the ability to do that research with the click of a button without the need of 3 different analysts with spreadsheets, I think that's mind-blowing how fast this is advancing and how many tools we see incorporating into the product.
With the market near record highs, is now a good time for people to join your platform?
I've always said it's always a good time to join the platform, to join the markets. We still see a huge gap in market participation across the globe. Just as a note, only 12% of households in Europe actually own stocks versus almost 60% in the US. So there's always time for people to learn about the markets and to join the markets. And I think generally we're bullish about 2025. It seems like an interesting super cycle is ahead.
Our thanks to eToro's CEO for joining me here at the stock exchange amid its New York launch. Optimism from eToro's CEO has data to back it up. Earlier, eToro's U.S. head told me that the platform is seeing an uptick in trading activity. Here's more from my interview with Andrew McCormick.
So we are very excited. We all know about the I Love New York shirts and touristy swag, and we absolutely want some eToro Loves New York because we are so thrilled and honored, and it's a privilege to serve the wonderful residents of the Empire State now.
For users in New York, how can they now sign up?
Yeah, so on either our mobile app or eToro.com, we'll get you there. And we pride ourselves in making investing easy and engaging. So a few clicks and you can sign up and start trading in your favorite stocks, ETFs, and options.
What does eToro offer its user base that is unique in this marketplace?
So we have a very unique DNA and heartbeat, and we believe in the power of community and common knowledge and the wisdom of the crowd. And so at eToro, not only can you invest and do your own research, but there are millions of users around the globe where you can ask questions to, share ideas with, have dialogue about. And just like in normal life, if you're looking for a recipe, you might go to social media. We think the same can be true in investing. And even in some of our surveys, we've seen over 80% of retail investors turn to social networks for investing ideas. So at eToro, you can do that and then put those ideas into practice and actually buy those stocks that you so love.
How does that social component work for users on your platform?
Yeah, well, it's an all-in-one app. So you open up your app or the desktop platform and you see a news feed, just like you're on a social media platform where people are talking about different tickers and symbols and markets in general. And if that sparks an idea, something that excites you, you can click on those ticker symbols and it brings you to a normal trading page, just like any other stock platform. And if you want to talk about the stock or investment you just made, you can do that same thing on the platform as well.
This news comes as the stock market sits near all-time highs. How does that factor into activity on your platform?
There's definitely an uptick, with the excitement of markets and markets going up that, we see trading activity go as well. But the great thing about capital markets, there's an opportunity at all times. So even in, stock markets are going down at times, there's still opportunities there. And you can be just a plain vanilla, boring buy and hold investor like myself, and you buy one trade and maybe just put recurring, investments in it every month. And just over time, believe that's a great way to, generate wealth as well in very simple ways.
What services does eToro offer its user base to educate people?
That is our passion, because investing can be hard. It can be challenging at times. And something me personally and the company as a whole are just passionate about is just getting more people to start that journey. The US government recently released a survey showing that only 58% of Americans have any exposure to stocks in the stock market. We are passionate about bringing that remaining 42% ultimately down to zero. So if you're a video person and you want to watch videos, we have videos explaining, how to place a trade, what is trading, what's an ETF, what's options. If you're someone a little older like myself, I love reading, so I love to read, the blogs, the how-to guides. But if you're a very technical trader, we have the technical charts. And we have this thing called the eToro Academy, where everything sits all in one spot. And we even have quizzes sometimes if you want to test your knowledge. And so we're really proud of that academy and think it's valuable regardless if you're brand new or if you're 20 years in, it can help anyone on their journey.
Why is now the time to get invested?
The perfect time is now. There's so much stress goes in sometimes of you're trying to perfectly time the market with the perfect investment. So many wise investors have said, trying time in the market is better than trying to time the market, and the best time to start is now. It can be small steps, right? I love eToro and the fact that you can make $10 trades, right? You don't need a lot of money to get started, and just making those small trades here and there and building that wealth and knowledge, I think is a great opportunity to start now.
Congratulations to eToro, which is now live in New York. Well, GMO's executive team is making its way up to the podium to celebrate the opening bell, and we'll have more on that when we come back.
Since we last talked, I know you have a major announcement. You just made the largest deal in the ASPM space. So talk to me.
Application Security Posture Management market, yes.
Yes. And I understand that it's with an NYSE listed company. We can't say the name.
Fortune 10.
Yes, Fortune 10 company. Tell me about this deal.
First and foremost, this is a deal that changes startups, okay? And we're super, super excited about it and why they decided to partner with us for 3 years. Very large deal was technology that we developed. We actually helped them automate all their security risk assessment questionnaires, build a real-time software inventory, and prioritize, remediate, and prevent risks before they get to the cloud.
Let's talk about how eToro recently launched the risk detection at the design phase. Can you talk to me more about this and how earlier detection in the software development of these kind of problems will help enhance the security outcome for businesses?
Based on NIST, the cost of fixing a defect at runtime when it reaches to the cloud, 100x more than in the design phase. So what we did, we developed our own private LLM model that scans every feature requests that gets into the development lifecycle. And automatically, we generate threat modeling, stories, mitigations before one line of code is written.
I do want to talk to you about a new product that I know that you are going to be unveiling soon. Can you tell me more about it?
I can't share all the details, but I will say the following. We're using the Apiro deep code analysis technology to identify our software architecture. The next phase is to visualize your software architecture in a very, very interesting way. It's like a living and breathing organism. It changes every day. So you need to visualize it to help developers write.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio as we await the opening bell. GMO, a global investment manager founded in 1977, is set to ring today's opening bell as it spotlights 4 ETFs trading on the NYSE Arca. Well, first is GMO, of course, celebrating the 1-year anniversary of its U.S. quality ETF, which it says follows companies with established track records of historical profitability and strong fundamentals. Some of its biggest holdings trade here at the NYSE, and they include Oracle, Johnson & Johnson, and Visa. GMO, which cites its willingness to challenge the status quo and its creative approach to investment problems, is also here to celebrate the launch of 3 new ETFs, which debuted at the end of October. The first is the International Value ETF. It aims to provide investors exposure to mispriced equity groups on the global scale. Well, notable holdings here on the NYSE include Novartis, TD Bank, and Honda. Next up is the U.S. Value ETF. It looks for the most attractively valued segments of the U.S. market. Notable holdings that are listed here include many of the big banks like JPMorgan Chase, Bank of America, and Goldman Sachs. Meanwhile, the International Quality ETF invests in international firms with successful track records. Notable holdings that trade here include Taiwan Semiconductor, SAP, and Unilever. Well, momentarily, GMO co-founder Jeremy Grantham is going to do the honors and ring the opening bell on the podium behind us. Grantham has served as the firm's long-term investment strategist, and he is the chair of the GMO board of directors, a partner of the firm, and has served on the investment boards of several nonprofits. Well, later in today's show, I'll be joined by the firm's CEO as well, Scott Hayward. And as the cheering starts, let's take a listen to that opening bell.
Brett, we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity so they can spend that on artificial intelligence. So,
All right, now, Brett, we're here at the New York Stock Exchange.
It's
You're
awesome.
on the trading floor.
It's awesome. I've seen all the movies.
Well, tell me, how does it feel to be here? And how does this experience align with Big Geo's goals and vision?
Well, first of all, it's great.
All right, we are officially open for trade here at the New York Stock Exchange. A lot to cover today, and I want to bring back my markets guest who joined me at the top of the show, Kevin Mon. He's the Chief Investment Officer and President at Hennian and Walsh. Kevin, now that we are officially open for trade, I want to revisit that Fed conversation that we were having and get your take on what the outlook might be.
Sure. Although the market and the Fed is guiding us towards a 25 basis point cut, I think Chair Powell gave a tell last week when he suggested that we're in no rush to cut interest rates. In fact, I wouldn't be surprised if they pause in December and perhaps adopt a much more gradual pace of rate reductions going forward, perhaps quarterly cuts through 2025 and 2026 until they get to their neutral rate of 2.9%.
And I also want to talk NVIDIA because artificial intelligence has been the buzzword for the past, 18 months or so at least. NVIDIA is going to report on Wednesday. It is one of the most valuable companies, will have an impact on the broader markets, obviously, that we cover here. What's your expectation?
I believe that by Wednesday afternoon, we're going to find out once again from NVIDIA that AI revolution is alive and well. Look, AI isn't a short road. It's going to be a very long road filled with many potholes. So investors need to be patient. Companies need to be patient with their CapEx spending. But NVIDIA is showing us that there is a path forward. Look, they're not stopping with Blackwell. Next year, they're unveiling their Ultra Blackwell chip. The following year, Rubin. And then in 2027, the Ultra Rubin chip. Now they're expanding into data centers. NVIDIA is providing a path forward, but there are many other companies that stand to benefit within the AI ecosystem.
And what are some of those companies? Are they specifically chip makers or other firms as well?
Yes, certainly chip makers such as Broadcom or even Taiwan Semiconductor, but look beyond that into the data centers, which are the nervous system of the overall AI ecosystem. Look at Digital Realty or even Prologis. And then I think about these data centers which really run hot, as we learned from NVIDIA with some of their overheating chips in certain servers. You need cooling solutions. They come from companies like Vertiv Holdings and Modine Manufacturing. So there's an abundance of opportunities within that AI ecosystem, and you need to look beyond NVIDIA, but don't ignore NVIDIA.
We've seen 90+% of the S&P 500 report so far, earnings this quarter. Most companies beating on the bottom line is typically the case, but what's your takeaway from the results that we have seen as we look to wind down this particular season?
So we got a blended earnings growth rate around 5.3%. That marks the 5th consecutive quarter of year-over-year earnings growth. That's good. But the disparity is very wide right now, and that earnings growth isn't just coming from all 11 sectors, but it's much more concentrated. We need that earnings growth to expand to allow the stock market rally to expand beyond those Mag 7. And the good news is, in the third quarter, those Mag 7 stocks, Kristen, only accounted for 9% of the total return of the S&P 500, whereas during the first half of the year, nearly 60%. So the rally is indeed expanding, but we need earnings to expand as well.
Are there certain sectors in particular that you see that are expanding, taking advantage of this moment?
Yeah, I would certainly look to utilities as a sector, communication services, information technology as a whole, but how about financials as well? Financials had a very difficult 2022 into early 23 because of the regional banking crisis, but they're bouncing back, so that creates opportunities as well. So look for continued expansion in those areas.
Kevin, you are a busy guy, I'm sure, meeting with all sorts of clients all over the country. I'm just curious, what else is on your radar?
What I'm really intrigued by right now is that investors are now coming back up for air again and looking for investment opportunities. Remember, Kristen, they were parked on the sidelines for the better part of the last 2 years in short-term CDs and short-term treasury yields yielding 5.5%. And rightly so, perhaps, in some cases. But now they see the path forward is for lower interest rates. They also know the stock market's up over 50% over the last 2 years. So they missed out by staying on the sidelines. So I continue to remind them, don't try and time the market. Trying to time the market is an exercise in futility. Stay invested, give yourself the degree of diversification you need, and stay with your longer-term plan for both income and growth.
Kevin Mon, he's the Chief Investment Officer and President at Hennian & Walsh. Kevin, thank you.
My pleasure, Kristen.
All right, well, stay with us because up next, I'm going to head down to the trading floor where GMO's Chief Executive Officer is going to join me to talk more about today's celebration. Stay with us.
What you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too. And that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it. But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well. We've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances. But I'll tell you, it's really important to listen to that cohort because their needs and the pressure that they're under is very different. And that's where I think we add a lot of value, and we add a lot of value to those partners, even outside of the credit program. Like we can actually help them on other topics. HR, finance, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. The customer experience has never been more important than it is right now. There is very little friction cost.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange. We are officially off to the races, and you saw GMOs celebrate the opening bell on our podium. I do want to welcome in Scott Hayward. He's GMO's Chief Executive Officer. Scott, thanks for joining and congratulations.
Thank you very much. We're thrilled to be here, and we really appreciated the warm welcome we got from the NYSE this morning.
What does today mean for you?
This has been a significant and momentous event for GMO because with almost 50 years in the markets, we've had the ability a year ago to launch now our 1-year anniversary, QLTY, which was an opportunity to make our quality strategy available to a broader audience. And we have launched our new suite of ETFs as a follow-on, and we think it's a great opportunity to make GMO accessible to investors all over the world.
I gave our viewers a rundown before the bell as to what these ETFs offer and the NYSE listed companies that are a part of them as holdings. But in your own words, how would you describe each of these unique offerings?
Each one, I think, captures a very distinct exposure for our clients' portfolios, and used in combination can be very attractive, provide differentiated returns, and consistent with GMO's way of being a contrarian and somewhat non-consensus investment organization.
You are an investment management company, and I'd like our viewers to hear more from you about how you moved into ETFs, expanded into this sector of the market.
Yeah, so we saw this as an opportunity to do two things. For many years, GMO's thought content has been available through our 7-year forecast, through Jeremy's quarterly letters, through the published research of all of our investment professionals, but not as accessible, particularly to the wealth market. And now, just about anybody can invest through these ETFs and GMO's investment strategies.
2025 is going to be here before we know it. And of course, a lot of people looking at their investment portfolios in the wake of the news that we've received over the past 2 weeks. What is your expectation for 2025?
I think 2025 will be a year where asset owners will be tested, and I think investment organizations like GMO that have identified exposures in both quality in the U.S. and abroad, as well as deep value in the U.S. abroad, will be very attractive solutions for their portfolios. And we hope with the launch of our next ETFs in January, both on the fixed income and the emerging market side, we'll be able to provide those exposures as well.
Scott Hayward, CEO at GMO, thank you so much for joining us, and congratulations again. All right, well, as we are officially underway for trade today, let's take a live look of the trading floor and see some of the action playing out in real time. All right, well, I'm honored now to be joined by more members of the GMO team. We've got Ben Inker, co-head of asset allocation on value ETFs, and Tom Hancock, head of focus quality on quality ETFs at GMO as well. Gentlemen, thank you so much for joining. And Tom, we will start with you. I'd like to know more about GMO's approach to quality investing.
Sure. So GMO is known as a value investor, but value comes with risks. Some of these are lower quality, lower cyclical businesses. So being willing to pay up for the kind of company that can reinvest its earnings at a high rate of return on capital, can do that in varying market environments, be resilient about who knows what's going to happen because it's always something strange. That's what's key to us, buying these great companies, holding them over time, not paying for them, but being willing to hold across the cycle. That's really been key to success for us.
And for our viewers watching, they know that the opening bell ceremony today is to celebrate new ETFs by GMO that launched in October. Then I want to bring you in and get your take on the new ETFs that you are tracking as well in the value space.
Yeah, we were thrilled to be able to launch two new ETFs, GMOI and GMOV, which are deep value portfolios in the US and international arenas, and we're really excited to be able to launch them now because right now these stocks are trading at some of the biggest discounts to the markets we have ever seen, some of the biggest in all of history. And so we think it is a great time for investors to be really focused on those deeper value names.
And Tom, it's been at least a year that we've seen the quality ETF trade. How has that been going?
Well, it's done fantastically well. It got a lot of adoption among GMO's existing clients. We've gotten to well over $1 billion in assets over a year. I think the consistency of the approach over the last few years has really resonated with people. And so, yeah, it's been great so far. Very excited. And as you say, we're doing more ETFs now.
And Ben, one more question to you. Your outlook for 2025, as we know strategists are taking to their books and penciling their own expectations for what's to come.
Yeah, well, 2025 is going to be an interesting year. I'd say it is a year where there is going to be more change happening than we're used to. And change is always tricky to try to kind of anticipate. But one of the nice things is some of those changes will be good for some of the companies that have gotten left behind in the rally of the last couple of years. So we are very excited for the prospects for value names in 2025.
Thank you, gentlemen, both for joining me. Congratulations again with GMO on that opening bell podium to celebrate your ETFs. We appreciate it. Okay, well, stay with us because with Thanksgiving turkey and Christmas ham probably on your holiday menu, it is tough to stay balanced. A personal trainer from NYSE listed health club Lifetime is going to tell us how to stay healthy this holiday season.
So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We've just rolled out whole branzino seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious.
Yeah,
we're going to have to try it when you open up your new restaurant.
That's
just,
right.
What, a block or two away?
That's right.
Yeah, talk to me about when that's going to be opening.
So we're opening by probably like middle of December, but it's World Trade Center. Really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot, so really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it. And we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here on the floor of the stock exchange, just under the bell podium. We are off to the races and following many sectors and stocks on the move today. Another topic, of course, in conversation is electric vehicles. We've seen a lot of movement in those shares of late. So joining me for more on this conversation, as we've seen President-elect Trump talk about what he is going to do with the EV tax credit, in particular, perhaps abolishing that $7,500 tax credit put forth by the Biden administration. I do want to bring in my next guest and introduce you to Gerard Filitti. He's a senior counsel at the Lawfare Project. Joins me now with more. Gerard, thanks so much for being here. And what can our viewers expect, Americans expect, when it comes to the EV space come January?
I think we can expect that if Trump does reduce or eliminate the tax credit, we will see a harder sell for electric cars. The price is already out of reach of most consumers, which is why why Biden had the tax credit in the first place. But with the reduction of the tax credit or its elimination, we'll see higher prices and fewer sales. This will be especially difficult for American manufacturers of electric vehicles. They're at a disadvantage compared to, for example, Tesla, which has been making a profit lately.
What is the legal process? I want to tap your legal expertise here of rolling back the $7,500 EV tax credit.
Well, and part of it is, there are two aspects of it. One is regulatory, because there are a number of rules that were enacted in order to make these credits possible. But it's also legislative, where this is all part of the reconciliation process, or will play out as part of the reconciliation process, in order to allocate budget money for the priorities that Trump has and extend the tax credits and the tax cuts that he had when he was president.
And in terms of where the EV space stands in America, it's holiday time. Many Americans are looking at their budgets. Give us a state of play.
Well, the state of play is, if you want to buy an electric car, probably now is the time to do it before we see a rollback of the tax credit. That will make cars more expensive on the consumer side, and we don't know whether we will also have an elimination of credits on other things that are related to it. For example, credits for installing power stations at home, credits related to solar and battery production as well. So if you're in the mood for buying an electric car, now is probably the time. You will see an increase in price, although if you're an investor in Tesla, you will be happy with what you're seeing.
Why is that specific with Tesla? Talk to me more about what that means.
Well, Tesla's the 600-pound gorilla. They've developed these cars for years, and they've actually started turning a profit. Other manufacturers like GM and Ford, and Chevy, they're at a disadvantage. They're still pouring a lot of money into developing these electric vehicles, and in order to sell them, they need that tax credit for their consumers. So without that tax credit, the American car manufacturers will be at a competitive disadvantage. Tesla will still probably be making a profit on sales, but they will continue steaming ahead while American companies will be playing catch-up.
Is there any legal implication here that we've seen incoming President Donald Trump, of course, be friendly with Tesla founder and CEO Elon Musk?
Well, the legal implication isn't necessarily with Musk or the friendship that Trump has with him. The legal implications may be if, for example, as part of this tax restructuring, eliminating EV credits, Trump does things like change the CAFE standards for petroleum-powered cars, or regulate California and eliminate the allowances that it has to make its own emission standards. Then you'll see a number of legal challenges. But whether or not Elon Musk and Trump are friends really doesn't have a legal challenge to what's going to happen.
I'm just curious, obviously you have the legal expertise here, but if we do see Elon Musk, let's say, be part of Trump's cabinet beyond just the Department of Government Efficiency, which was enacted as of last week, we saw that particular appointment. What would it mean for a company like Tesla?
Well, then you'd start having issues with government ethics rules and standards, and then there might be a need for Elon Musk to distance himself from Tesla or else not have an active role in government. Ultimately, that is what's more concerning, is the relationship that Musk has and the influence and power that he holds. If he's just a counsel to the president, it's not as problematic as if he has an official role in government with policy implementing powers.
Gerard Filitti, thank you so much for joining. Of course, with the legal expertise here, we're getting set for a new administration and a new year. We appreciate your time.
Pleasure. Thank you so much.
Thank you. All right, well, let's take another live look at the trading floor here, as we are just about 25 minutes into the start of trade. A lot of action down here on the floor of the stock exchange as retail earnings continue to come in. All right, well, the holidays are going to be here before we know it, filled with shopping, eating, and spending time with family. Doesn't always leave a lot of time to stay in shape and make sure that we are healthy. Joining me now to give us a gut check, of course, leading into the holidays as to how we can prioritize our health is Emiliano Tramontosi. He's a club leader and dynamic personal trainer at Lifetime. Emiliano, thank you so much for joining. My first question to you is, what is your best tip to stay healthy this holiday season?
Yeah, there's a lot of good ways to stay healthy. One of the three things that we find is making sure you're still getting your strength training and your exercise in. At the same time, proper nutrition is key. And then sleep, being able to restore, is also paramount.
How much sleep on average? I feel like that's the first to go during the holidays.
Yes, absolutely. There's a lot of moving pieces, a lot of stuff going on. Sleep, as long as you can get it in intervals, if you can't get a full night's rest, at our recovery spaces, we have fantastic tools that you can utilize, like a hydro massage bed, to get some of those power naps in. And as long as you're able to get 7 to 9 hours, you should be in a good space.
Any fun, active tips to do with your family so you could all stay healthy together and maybe just kind of get up and have a little break where you can move around?
Yeah, you know, the holiday times are good family times. Lifetime, we pride ourselves on being that family company for a healthy way of life. So for us, we have a parents' night out where, you know, families are able to come in, maybe even do some kids yoga and stuff like that. And then all of our classes, you're able to engage in stuff. But one of the things that's really cool and trending right now is pickleball. And we are one of the largest owners of the pickleball space. And it's a great time to have some fun, some camaraderie, team sports activity with your kids and your whole family.
So, Emiliano, I will tell you that I love pickleball. Yes, it is a great sport and a great activity, especially with the family. I agree. How can our viewers take advantage of pickleball courts at Lifetime?
So pickleball courts, we have them available all throughout our offering in our 30 states, but right here in New York City, right up on Penn Station, we have a tremendous pickleball space with private courts if you wanted to do an event for, let's say, a social gathering or maybe even a work outing as well. And that's one of the ways where you can get involved. I would go down to the local Lifetime, see how you can go ahead and get coordinated with that.
What is it that you like about pickleball?
It's some parts tennis, some parts ping pong, but it's very athletic. It's great for all ages. It's a very easy on-ramp to get involved with a healthy way of life and fitness. And it's a fun activity where you can gamify your workout.
I like it because there also seems to be a social aspect as well, right? You're pretty close to each other, playing with your family and friends perhaps. What does that do for your mental health during the holidays as well?
Yeah, mental health is very important, right? Oftentimes we're going so fast throughout the day and we're combating mental stress with physical stress, but the time that you can spend together and build a community, which is what we find in our clubs and our athletic country clubs, so helpful that it's not just a place to work out, it's a place where you can engage and socialize.
Emiliano, thank you so much for the tips, great reminders, and ways to set ourselves up for success this holiday season. Emiliano is with Lifetime. We appreciate it. All right, everyone. Well, thank you for watching today's show. We had a lot of dynamic action here on the trading floor and in studio. Stocks on the move as eToro is now officially live in New York. Retail earnings on tap and NVIDIA results tomorrow. We will be covering all of it right here on NYSE TV Live. I'm Kristen Scholler.
I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.